why you must commit to your trades. Hi, it's Charlie giving you Saturday's video, and let's use the S&P as an example here. This is a great example actually. I was asked this week, and I'm often asked about various markets, and this is a classic example that I was asked. A trader was long the S&P, and their question was, they were long. Oh, actually, I think they were long the Nasdaq actually. So let's just see if we can bring this down a little bit. So they're long the Nasdaq. Okay, and I've just got this as a CFD on here, not the actual Nasdaq cash market. So this is like a continuous contract, and the trader is looking. Oh, I can't remember what the levels were. So somewhere up here as a target. They've got a target up here. And their question was, Charlie, should I bank my profits on the Nasdaq because the Nasdaq has gapped up and the S&P has gapped up? I can show you the gaps in a minute on the cash markets, and they may well come back and fill the gap. So should I bank my profits here, even though the target is right up here? And and then and the question is, then I can get back in on a pullback, once it pulls back. So the assumption is that it's going to happen. So, and then I'll get back in a pullback and then run it higher, sort of thing over there. So the first thing is to note is that nobody knows what's going to happen next. So there's no guarantee just because a market has gapped that it's going to pull back. So that's the first thing. So if you start to second guess what the market's doing, so often it would be the time that you second guess, you bank your small profit there and your target was up here, and it doesn't pull back and it just marches its way higher and you don't get a chance to get back in. So that's what you have to tell yourself, because we can get clever as traders and say, well, I'll get out here and I'll get back in on a pullback, but it's not always a guarantee that pullback will materialize. So you have to ask yourself the question, well, will I be frustrated if I do bank my profits and it doesn't pull back and it runs away from me and I don't manage to get back in? So you have to ask yourself those questions. So, and the other thing is to come, I'll use the S&P as an example. So gaps around a lot. So we can see that the S&P has had two gaps to the upside here over the last this current week. And again, a lot of traders assume, oh, okay, well, we've got these gaps, they're bound to close. Well, they may well close, but they may not as well. Just because a market has a gap doesn't always guarantee that it's going to come straight back. Look at this gap here. That's a whopper of a gap from closing down here to opening up here. It took, over a month or more before it came all the way back and obviously went higher first. So there are always going to be times where you get gaps where price just keeps going. Look, gapped up here and then had this amazing overall run and took I don't know what that is, 2 months or more before it came back down. So and look at these gaps here. Look, gap down and a big move to the downside. So I think what you have to be careful of, especially with things like gaps. I'm just going to see if I can reset this chart, restore the pane. Yeah. Especially with things like gaps, is that our eyes naturally look at gaps and say, oh yeah, they get filled a lot, and they do, but there's still plenty that don't, or that take a considerable amount of time before they do. So I think coming back to the title of this video today is you really have to commit to your trade. If you've taken a trade, whatever that trade is, if I take this back to the Nasdaq now, whatever that trade is, and you've got a target right up here, then if you're not committed to the trade, it's very easy to get thrown off, because the market's always going to be tempting you to come out. That's what the market does. It's trying to goad you into, even when you're in a profitable trade, to come out ahead of whatever your exit strategy is, whether it's a target or even if you are using something like a trailing stop, it will often try and scupper your plans. So don't allow the market to goad you into doing that. The problem is that people will say, let's say it does pull back. You'll say, oh, look, see, it did pull back. It filled those gaps and then it went higher. Oh, right, next time I'll come out. And I can tell you the next time you go and do that, it won't do it and it will just go straight higher and you've missed out. It's always the way. It's Murphy's Law. So I think sometimes you just have to commit to your trade. And it's not sometimes, all of the time, you should commit to your trade. Whatever your trade plan was for that trade, you've got to try and stay with it. Whatever that plan is, whether you're using like I said, some form of trailing stop, or you have a plan to take partial exits, and whatever the plan is, stay with the plan. Don't allow the market to put you off, because things are going to happen. Little bits of news are going to break. So there'll be news events and the market might sell off against your position, but it might only last a day or so and up it goes again. So let's take a euro dollar as an example. This is a good example actually here, where the euro a week ago had a bit of a sell-off. The market's got, or the euro had got the jitters a little bit on these concerns around Deutsche Bank. But if you allowed those jitters to affect you, and let's say you were long the euro from down here, then you've just jumped out of your trade because of those fears based on the news, only to then see it drift its way back higher again. So the point is, stick to your plan, whatever that plan is. Commit to the trade. It takes mental work. You don't just put a trade on and walk away from it. You do, but you still have to work on the mindset, because the market is going to be throwing things at you, whether it's things like gaps, as we've just used an example on the stock markets there, or it might be a news event, which I've just used as an example here on a currency. The market's always going to be doing that, and that's why you have to be committed to your trade and constantly work on, right, these are the reasons why I'm staying with my plan. I can't afford to jump off, because it will be Murphy's Law. If I jump off, the market will then carry on and then I'll be frustrated. I have to stay with my plan. The people who are better at staying with their plans generally are better overall in their performance as well. Hopefully that gives you some food for thought there for today's video. Have a wonderful weekend. I'll see you next week.